All right, so in this video, I'm going to explain the buys and the sells that I took on NASDAQ. Easy peasy trades. You want to stick around for this one because I'm going to get into the details. It's been a while since I dropped a video here. However, let's kind of dive in. I think going forward here, I'll drop some more videos more consistently and kind of explain things in a manner and how I approach things and different ways you could look at the charts and be able to accomplish similar results and take similar trades. Now, to begin with, you're probably seeing a lot of stuff on my charts, so I'm gonna tell you what each thing is. All these colors. First of all, these right here, you can see the buys. I bought 10 contracts of NASDAQ, sold them up here, sold the NASDAQ, and bought them back down here. Okay, so buys to get out here, and then sells to get out down here. And then I'm also going to explain this move here that took place. I think this was also an easy trade I could have been taking, but I already had a lot on my plate with the sales, with the buys and sells. So just so you know here, what I'm trading right now is actually being very transparent. It's actually a Top Step funded account. So essentially still in the challenge phase. However, and typically I'm very reluctant sharing stuff like that, but this is in the challenge phase, and I don't mind. So you can see the account right now is at 156,000, so I need like about $2,900 more to get it to the 9,000 mark, then to go into the express funded account or into the funded stage. So looking forward to that, and then you can see I also have the similar account, which I'm trading as well, which is up $3,000, and that account as well. You can see I took the similar trade. Probably just less leverage, but you can see similar trades taken. So I'm not just taking trades, buys and sells on one account and sells on another account. Like trading based off what I'm seeing, what I'm expecting the price, and not just gambling and tossing the coin up in the air to decide what's going to make me a better trade, right? I think when you get into the markets here, you have to figure out where's the market going, understand it from a higher time frame basis, then execute based off a lower time frame. And that's exactly what I did here. So to begin with here, and I'm just going to put it back on this account for a second here, just because. Okay. So, and one other thing I've changed also in my trading is I started trading with mini contracts instead of the micros. I mean, micros instead of minis. The micros affords me the ability to cut my position in half, or to reduce my risk by closing out of one position at a time. Previously, I was just trading the minis, which will only allow me to trade like one or two contracts. At least that's what I was comfortable with. And what that did was, whenever price would hit my first target, I either was in a position to either fully close out the trade or risk the trade coming back against me. And I was just really, really uncomfortable only having one contract or two contracts on, because sometimes you have multiple exits. Just like over here, you see I exited a position here, here, and here. Like, I can only do that currently with the leverage I have or what I'm comfortable with risking with micros. So it's important as well. That's also helped me, get back on a certain track, because I would say I was used to trading Forex for a while. And you know how Forex is, you can trade 50 lots. And with that, you can then cut your position by a lot at a time. So you're allowed to constantly cut your positions lower and lower and lower. Meanwhile, on the indices, if you just put in one contract, you're not going to trade 50 contracts on NASDAQ, right? Like yeah. So long story short, trade minis. You might have the mindset of, well, I want to be the big boys league. I mean, trade micros. I want to be the big boys league, so I'm trading minis. But it's the same shit. It really is. Like, it's just that you have a better chance and you have more opportunity to actually cut your positions and reduce your risk as your targets are being hit. So I think it's important to focus on micros versus trying to trade the mini contracts. It affords you more ability to reduce your risk. So now, what are all these areas in price? So first of all, we have this green shaded area, which is a daily volume imbalance. And also this green shaded area here, which is a daily volume imbalance as well. So keep those areas in mind. And then is the 15-minute chart. So this area here is always a 15-minute fair value. Okay. And these red dotted lines here, that comes with a monthly time frame. I don't feel like touching on that right now, but it's not as significant right now in the moment. But just know these are like monthly levels that I also watch. Pretty much monthly open, high, lows, and close. That's another topic I'll save for a different day. So these are all the levels on the chart. Okay. Now let's go into and also look on this right here. This is a 15-minute. Again, it's shaded orange area. It's also from the 15-minute time frame as well. Okay. And then if you look on the 5-minute time frame, you have these black lines. So let me go ahead and hide these executions for now so we can get to work. Okay, so executions are gone now. Now let's kind of replay, because remember, one of the moves was taken from here to here. Okay, so let's focus on that for a second. These buys, this is after CPI dropped to 830. I took some buys from here all the way to here. So we'll go back to executions just one more time so you can see it. We're taking it one step at a time. You see the buys took place from here to here. Go on a 1-minute time frame. You see, and I bought here on this candle and got out here, and I bought 10 contracts. Put some in there so you can see it. I like to show you everything. All right, so you can see right here, 10 contracts about here, and I floated about 2, 4. Let's call it 6, 7, 8. About 8 of them, 9 of them up here. And then eventually got taken out. This is my stop loss. And that completed my buy. So from here to here, taking off about 8 contracts here as this traded into a 15-minute fair value gap and also that daily volume imbalance. Okay. And then eventually the market turned around and I got out right here. And I got in sales right here. It's 1-minute fair value gap and price dropped again to another daily volume imbalance. Got here, got here, got here, and got out here as it creeps lower, closer to previous days' lows. All right, so we're gonna get into all of that. Now, just to afford me the ability to let's go to a very similar chart here. Well, it's okay. I'll just stick to this. Bar replay. Now I'm gonna put this bar replay so we can look at trade I took. Okay. So what happened here? Why was I interested in taking this trade? First of all, if you look on let's go to the daily chart here. Just so you know what's in place here, okay? On the daily chart, again, try to ignore this candle. Because this is a current day's candle. There's a volume imbalance here, which I showed you, which is drawn out in green, and one right here. That's what we have. So I'm looking at how price wants to interact with these two levels here and here. That's what I was looking at to start the day. Okay. And then let's go ahead and go back to 15-minute chart. So now on a 15-minute chart, what we actually had was price driving lower. So I was really interested in this fair value gap here. Because if you look previously, it supported price going higher. So when it's coming down, this 15-minute fair value gap, which is shaded in orange here, this one, look at how it held price here, higher. That became of interest. So as price traded down on the release of CPI, boom. Okay, what do we see happen on S&P? The S&P actually ran out these lows. I noticed NASDAQ was reluctant to do so. So therefore, this again made this of more importance. All right. So we had an SMT, one market that's should be moving in a similar direction. One, the S&P took this out. Look at the S&P real quick. So you can see the S&P again took out its intraday lows. Meanwhile, Nasdaq did not do the same. All right, and then another thing here, we also were bouncing off of the opening midnight price, which I also find important. So a couple things are going on here. Running lower, taking out liquidity, failing to take out these lows like S&P, hitting midnight opening price, and also respecting this fair value gap. So now, I was looking at the 5-second chart. Let's see if the 1-minute chart give us anything. All right, let me go straight into the 5-second chart. That's what piqued my interest. So we go to the 5-second chart. We had a breaker. I noticed how price ran lower aggressively, taking out these lows, and then we traded back above this high. So I was really watching how price was interacting with this breaker, and therefore I entered a position within the breaker. And if I'm being honest with you, I entered as the 15-minute candle was still working its way. So again, it's important to look at how candles open and close, because when the candle's close to closing, then you can actually make an assumption of how the candle's going to look, and that gives you an idea of where the candle might go. What I'm watching is how do the markets respect the PD arrays or the fair value gaps or the order blocks. So if we look at a 15-minute time frame, I'm seeing this orange level is a 15-minute fair value gap. If I'm watching the candlestick trade in there, if I'm expecting to act as a bullish order block, I do not want to see that candle close below the fair value gap. I want to see that candle, yes, it can dip in here, but I want to see it eventually close either above or at the midpoint of this shaded area. So because I felt that the market would offer buys, I was able to get in as that candle from 8:30 to 8:45. So 8:30 to 8:45 is 8:30. Starting here, 8:45. So put it here. It's 8:45. Okay. So I was trading between this range, 8:30 to 8:45. I felt confident that price was likely to not go lower, especially after seeing this breaker and again after seeing SMT. So I was able to get in position within this range. Again, I'm not going to tell you exact candle because I have to go back, look at executions, and then you see the execution for yourself. I'll go on the 5-second candle. It's too many 5-second candles. I can tell you the exact one at a specific moment. Maybe towards the end, I'll show you that entry again. So we got in here. But however, where would have been the cleaner entry, if I'm being honest with you? It would have actually been right here in this fair value gap, right? This price dropped here. Why did I say that? Because now we know that price has traded from 8:30, right? It traded lower. Let's go to 15-minute chart again. So now we know that price has actually on the 15-minute chart traded in here. It's 8:30 candle. Traded lower and then rejected and then closed it at 8:45. So now we have real proof or evidence, at least, that price is likely to again respect its fair value gap. So now starting at 8:45 is where I'm just giving you where the best entry would have really been, in retrospect. Always gonna get better here. So at 8:45 going forward is where we really should have hunted our entries. So I got it quite early because of the experience I have. I was anticipating that candle would not, or that candle would. I was anticipating this candle right here with respect to fair value gap. Okay, but a better entry again would have been after this candle closes, showing respect to fair value gap. So let's look at 8:45 again and beyond. What do you have beyond that 5-second chart? Take a look at it. Okay, you can see this fair value gap present itself right here. So this price then dipped into here. This would have been a better entry, or at least more precise and snappy, quick to the point, straight to the point. So this is why I got that trade again. Price eventually took off and went up for about 100 points. Okay, 100 and really about 130 points. So it's a sizable range, even though I personally want to be short for the day. Very, very sizable range there. So that was that trade. Like very, very simple, straight to the point. SMT, fair value gas being respected. And we see a 5 second breaker. Also being respected. And obviously, whenever there's SMT, one thing you also have to pay attention to, one from my experience, whenever I see an SMT happen where NASDAQ fails from a low, I expect some type of reversal or some type of run of liquidity. Where is the only run of liquidity that can take place? I would say SMT. It's all the way up here, this high. So once I saw that NASDAQ was failing to run lower like S&P, now its reversal likely lead us into this liquidity pool. Or if there's a fair value gap, a lot of times you see price trade all the way back to that fair value gap and then decide if it wants to continue dropping like its mates or like similar pairs. So in this case, failure to run these lows, and then we expect a reversal or some type of retracement. What do we have here? A clean liquidity pool. Price then trades higher, taking on the liquidity pool. And above the liquidity pool, we have a daily volume imbalance. I can show you on the daily chart. So that was expected. Expect the areas to draw price like a magnet, and we get in there. So that was the first trade, okay? Let's talk about the buys. Now the buys here, what took place? We are, if you look at price opened down here. We're trading way above opening price and we're all the way up here. Okay. So this is now 9:30 opening compared to midnight opening. So you can see how high we are above here. So in my mind, we are at a premium. Price is expensive. We've also traded into a daily volume imbalance, a daily time frame level. Okay, a daily PD array. So we trade that volume imbalance on the daily chart. And then we see price immediately show a reaction there at 9:30. Where are the liquidity pools? Well, you have this low right here, and you have this low right here that price could take out. And again, you have the shaded area, which is green area shaded, which is daily volume imbalance. So this, like, I see this as a ping pong opportunity. When I see PD arrays kind of lined up the way this one was, there is a potential for the market to trade into one first and trade to next. And notice how here during CPI's release, it fell short of dropping this volume imbalance. So already I'm looking at this as, yes, we're rallying higher. However, since we fell short of hopping to this volume imbalance, daily volume imbalance, we're likely to revisit that. And on top of that, since we fell short of taking out these lows like S&P, we are also likely to revisit those lows as well, especially if you look at S&P and there are more layers of liquidity that are obvious that's likely to run. So I'm always gauging, looking at other pairs. Okay, yes, NASDAQ might fail to run these lows, and S&P might be ahead of it, but there's obviously more pools of liquidity that S&P is going to take out or US 30 is going to take out. Then when price starts moving in the sales direction of the sales again, I can then expect NASDAQ to revisit those lows and not take out initially, which will be these lows as well. So in the video, you probably saw me move my exit positions here and there because I knew there's a strong likelihood we're going to take out these lows and not just this low. Okay, so back to it. So we have, I'm going to delete this 845 because it's not really of any significance apart from what I explained. So we run up here, daily volume imbalance. We start breaking down. See this fair value gap right here? Right here. Notice how price trades below that and then trades back in there. That alone is also an entry on zone. And then notice how price drops again. Look at this volume, this fair value gap here. Look at how when price trades below it, all it's doing is wicking above. Wicking above. And you notice this 5 minute fair value gap here. Let's kind of, hope we don't get lost, but we draw this out. Where did it go? Where are you? Okay. So look at this 5 minute fair value gap all the way from Friday. That's where you get this level from Friday. All the way from Friday, okay? I drew that out, extended that all the way out, okay? I mean, notice how price was respecting it on Tuesday as well. It traded to the area and we had a drop. Then Wednesday today, yes, price runs above it, but this is previous 9:30 open. And 9:30 open, we actually run below that. Trade back in there, sell off. And at this point, we have what? Smart money reversal. We have this right here, a low risk sell. So now I'm looking at this as an order block. Price also has traded below this fair value gap here. Price trading back in here on a 5 minute chart. And I can expect it to spew out lower. And what did price do? Boom. Now, if we're to go on a 1 minute chart, I believe that's a view that I showed, 5 minute and 1 minute chart. On 1 minute chart, you can see how this goes again. You see the smart money reverse on the top. We trade into a fair value gap slightly above 9:30 open. We drop again. Look how we create this fair value gap right here. Very sexy entry right here, which I took. See, you consolidate this a little bit. It draws lower. You can see what price is doing here. Another fair value gap here for another drop lower. And price again trades that 5 minute inversion fair value gap for an immediate drop lower. Easy setup day. And that was each level where there was buying, there was selling. So if you notice here, there's a little block of buying here, right, with these down close candles. On the opposite end, you can see sell-offs happen. These down close candles. On the opposite end, you can see selling happen. These, call these down close candles here. Opposite end, you can see another sell-off happen. So easy trade execution for the day. Again, this was in total, look at the summary, $3,200 day on this account, and then $2,700 day, $2,800 day on this account. So, once you get into that funded stage, imagine that's easily a $6,000 day, right? Beyond with 2 accounts. So just the possibilities of, and what's gonna happen here. It's beautiful to make $6,000 a day. And imagine just sit back and not even trade again for the week. You just do this once a week or even twice a week when the best setup appears, then less is more. Like truly just on a daily basis, that's what I'm drilling into my mind. Less is more. Not caring about the little swings that, yes, they might give you profit, but it might be a headache to you. Like perhaps I didn't even have to take these buys, but it was clean. The risk was worth it, so I took it. But I'm just saying, like every single day there's gonna be a training, unless it's clear. The price is clear on what it wants to do, then take advantage of that, right? When it's unclear, then let it go. Less is more. Again, if you make $6,000 in a day, some in a month, they're happy with that. But if you make $6,000 a day, and you do that twice a week, it's $12,000 a week. You do the math on that in a month, 50,000. So it's like, it's not hard. It's just about, can you control your emotions? And I'm saying this not just to you, but also to myself. I'm drilling this in my mind. Like, all of the money that we want to get here or gain from trading, it's not about everyday trading. It's about picking the best trades. When you can pick the best trades only, you're satisfied with taking the best trades only. The profits will grow exponentially because you're no longer taking mediocre trades. You're no longer taking trades that take away, where the market gives you something and it takes back from you. Just so you look at this right here again. Another thing, lab precision. Why? Look at these lows that from the previous day. Clearly a double bottom. So markets will target that as well. Again, we run higher, taking out this liquidity pool right here. Daily volume imbalance, and boom. Now take out this liquidity pool here. And why did price reverse the way it has so far? Okay, if you just take a look at the S&P, just 1 second, look at this chart on Nasdaq, okay? We took out Tuesday's lows. Look at the S&P here. Oh, come on. Look at the S&P. Okay, S&P took out Monday's lows. Okay, so again, back to what I told you earlier. Whenever there's an SMT, you can expect a reversal. You can expect a retracement. You can expect those things. So what does Nasdaq do since Nasdaq is able to take out its lows? We can expect a retracement or reversal on a 15-minute chart. What does price end up doing after taking out those lows? Let's just see this. Okay. And this is a trade, honestly, if I was still looking, I was taking it. But I already had a good day, so there's no need to put more at risk. But if you look on a 5-minute chart, I think this is a market maker buy model. It's pretty simple. Price takes out a low, reverses, gives you an entry right here, fair value gap right here. It goes above that. Now, what's interesting here again, remember we have a daily volume imbalance. So I personally have taken this until I want to see like the markets. I want to see price support or respect an area of accumulation twice on the move before I can consider taking something. What does that look like? Right here, we have an order block made right here. Price trades into that. So that's boom, one level. Then we have this fair value gap here. Price trades into this fair value gap right here. I'll just draw it out. Near a monthly level of that, so let's call that out here. The shape, the red area again, near a monthly level. You can see price respects that. Boom. So now, obviously, where's price likely to target? These highs. Okay. What does price then do? It trades back into a monthly level, and also this volume imbalance. Volume imbalance on the daily chart, and boom. So would I have entered this trade if I was watching this? Not today, I already took 2 trades, but in terms of how easy today was, like, yes, this would be an easy entry, and targeting these highs for 200 points. And this is like an easy entry. Why would that be easy to me? Because again, he ran now. Okay, I'll say this here, for those that have watched it long enough. So I look at the opening prices as levels of expensive and cheap. Okay, I'm gonna say that. So what I'm watching is at 9:30, we drop so much lower below that. I'm not trying to continue selling this if it starts coming up. Now it's gonna drop so much lower below that, and so much lower below midnight opening price. We are cheap. If we start climbing back and disrespecting fair value gaps like this one right here, that should perhaps, if it's price trading, that should drop price lower. But no, instead it creates another fair value gap. This is what you call a balanced range, where there's 2 fair value gaps side by side. And then, so there's been pretty much selling and then buying. So now a fair value gap here. And where are we? Where does price trade below? Again, opening price at midnight. It's not a line here. And there's also 750 level, which I don't really hear ICT talk much about, but I look at these quarterly levels as well. So price trades into that 19,750. It's a fair value gap. Obvious entry, stop loss below here. Again, when markets give you something in your hands, you got to take it, because you can't win every trade. You're not going to win every trade, but it's a numbers game. So when it presents an opportunity for you to take a trade and you haven't taken one, you can't be scared. You have to incur some risk. And this would be a good entry to take some risk for a run above these highs. 200-point run. That's what price did. There was nothing hard. and it ran even higher into now this is a weekly level here. So I think price is done, honestly speaking. It could be more, but that was actually a good trade if I was looking at that. That's almost a 400-point run. These markets are really moving here. Even if I put on, let's just call it two contracts here, two minis, that could have been a $1,600 trade on top of the 6,000. Again, I'm not saying I've taken it since I already made good enough profit, but just saying it was easy, easy, easy. And then on top of that, why would you expect it? Because again, let me take away the executions. This high here left this high intact. So there's a lot of liquidity resting here. A lot. So price could easily run above those, which I think it's going to do here. This high definitely was a target. It could definitely run above these. Overall, I'm bearish on this market, but whatever price giving here is, I'm still bearish. Even if it runs out those highs, we still have this fair value gap to contend with. And I expect this to hold price. If it doesn't, then obviously it'll go higher. So I'm not going to get ahead of myself. But point is, the trades were not super easy today. That's what I'm looking for. Easy trades. Can I see how prices interacting there? Liquidity pools, SMTs, opening prices. Are we cheap? Are we expensive? Are they a market maker buy models in place? Are fair value, bullish fair value gaps being respected? Or fair value gaps in the direction you expect the price to go to be respected? You have to watch all those things to pay attention to what price is doing and likely to do. But today was very, very easy. Even looking at a 5-minute chart again, like the breakdown was easy. In fact, I would say these buys were easier than the sells. Looking at it right now, the buys right here is clear market maker buy model. Super clear. Beautiful. I mean, this entry here would have been so freaking beautiful. All right, so this is me missing the better trade in my opinion, and still making having a 6,000 potential day, right? So again, these markets we can carve all we want out of it, but also respect to the risk. Okay. Again, less is more. Less is more. So I'm not really. Some people look at this trade and say, "Well, you didn't take it," and they'll get angry, or just taking this trade. I don't really care anymore, honestly. So I've been doing this here, just cleansing myself of the need to want to take every single trade. Don't really care as much. The better trades really come after 10 o'clock, if I'm being realistic. So I actually even shy away from trading the markets before 9:30 these days, or 9:50. That's because the only reason I did it today was it was kind of clear to me what my price like to do is CPI as well. And I didn't see the momentum you usually see in CPI. I usually see a bigger market move. So I had a feeling, and looking at the price, lined up the price likes to go higher. So I took that. But really, again, the better trade, look at this 950. This is order block, sell off. And this right here is right at 12 o'clock, 11:55. Entry, buys. So I don't know. I hope that was helpful and insightful there. One more videos like this. Again, I'm going to start dropping more videos and giving more details on things. I'm also working on the course, so you guys can join. If you do want to join my private or really public Telegram group where I'm dropping charts and talking about maybe what my next moves might be, click on the link below and please follow. If you haven't subscribed, I want to make sure you haven't subscribed. Go ahead and subscribe, like this video, share with a friend. Let's keep the ball rolling. Colossal Trader out. Another day in the lab of precision. Talk to you